Yo, what's up, guys? On Friday, my stock portfolio tanked. We were down nearly $2,000 when you combine all of our accounts, but I've actually made some major changes to my portfolio, something I don't normally do and something I won't do again for a very long time. But I bought two brand new positions in my never sell portfolio. Oh, here's our two portfolios combined. We were down 2.23% in the day, but I bought two brand new stocks in this account and also sold some stocks. I completely sold out a DocuSign and Perion and replaced them with two brand new companies. So I want to share with you those two stocks I bought that I think are going to be phenomenal forever holds in my never sell account. So this portfolio right here is called my dividend only portfolio. Let me share with you how this one did on Friday. You know it's bad when McDonald's is up and everything else is red. Actually, our one other company that was green was Carlisle. That's that roofing company. Maybe the stock did a bunch of share buybacks and kept the stock green. But yeah, everything was red. If we go to our watch list, the Q's down 3.4, and it recovered a little bit after hours, but at one point it was down like 4% to nearly 5%. But yeah, NVIDIA was down 5, Apple 3. A lot of stocks we own are Robinhood. Oh, if we go to our Webull portfolio, our Robinhood, SoFi, a lot of our stocks tanked. But let me share with you the two new stocks I actually picked up here in my, as you can see, buy and never sell portfolio, which I the name isn't too accurate, but look at this. We completely sold out of DocuSign, and with all the proceeds with DocuSign, we decided to buy ticker symbol RACE Ferrari stock. And we're down on our position, but yeah, I decided to buy 3 shares of Ferrari stock. And I didn't just buy them because the stock tanked. I'll get into the reason for why the stock fell in a second, but I bought the company because they have great fundamentals. This is a financially sound company that I'm super comfortable with holding, and I actually trust Ferrari more than DocuSign. I'll go into DocuSign a little later. DocuSign actually, OpenAI just released something called DocuGPT, a direct competitor to DocuSign. DocuSign really just has no moat, no competitive advantage, no IP really, so I decided to completely sell out of them. But another stock I decided to buy was ticker symbol MUSA Murphy. This is a convenience store slash oil and gas company, and I cannot believe how amazing their fundamentals are. Literally just since 2019 Q4, so right before 2020, they've literally bought back 36% of all the shares that exist. I kid you not, this is an extremely shareholder-friendly company. Just in the past year, they've bought back 5.5% of all the shares, and you get a nice yield. But notice the payout ratio to the right of this. It's a 0.5% yield, and the payout ratio is a 7.4. It's actually a little lower than 7.4. I kid you not. I can't wait to go over this one in a minute here. But yeah, those are the two stocks that I decided to pick up here, and I want to now give you my thoughts on why I bought these two companies. But before that, I just want to say I'm not an expert. None of this is financial advice. I'm just a college student, and I would really appreciate it if you just hit the like button on the video. I'd really appreciate that. And hit the subscribe button if you want to. We also stream daily on here. But anyway, let me share with you why I bought Ferrari. Again, I didn't just buy Ferrari stock because they tanked. I bought them because of their good, high-quality fundamentals. This is actually why the stock fell. If we go to this right here, and I believe they did this super conservative, but Ferrari projects a 5% annual revenue growth, basically CAGR, through the end of the decade, through 2030. 5% annual revenue growth for a company trading at, it's trading at 38 times PE today, but before today it was trading at 45. They had to give this company a more realistic valuation, and now this is a valuation that I'm happy to pay with. So there's so many cool things about Ferrari, like 10 to 15% of the revenue comes from their sponsorship revenue, which is all pure margin for them. Companies wanting to advertise their logos and businesses at their races, at key events, networking there at their races, and companies pay so much money to Ferrari to do that because they're networking with the most high net worth individuals. Remember, you've never seen a commercial for Ferrari because the people buying Ferraris aren't watching TV or whatever the saying goes. But anyway, here is a great video of someone not recognizing the AMD CEO, but this video ties back to the fact that companies really want to put their name out on the Ferrari car because you're advertising it to the most high net worth individuals, the most important, people that are hard to really get your brand out to. So check this out right here. This is a funny CEO, or it's a funny moment. Check this out.
Excuse me, ma'am, do you speak English?
Yes, I do.
Well, you're Marty's random person, the first one of the year. How are you and what are you doing on the grid? I'm doing great. I'm with AMD, so we're sponsoring the Ferrari car. Okay, yes. So we're right. So you got VIP access. Look, you've got access everywhere by the looks of it. So that's the secret. Become a sponsor of Ferrari.
Yes, thank you. It's great. Fantastic.
All right, good to see you.
But anyway, let me share with you their current numbers, why I love Ferrari. This is an EU company, so we have converted their currency from EUR to USD. They're NYSE listed, so there's no weird tax burden. It's just like any other stock. But check this out. The revenue's up 15% after growing 15, after growing 33 again. If we go here to these estimates, they project 5% annual revenue growth CAGR. I believe it's going to be a little more than that. A lot of their cars are literally backlogged into 2026, 2027, where if you order their car right now, you still can't get it because they're so backlogged. They have limited quantity. I love Ferrari. And they, they're not just selling a car. If anyone wanted a car to get to point A to B, they'd just pick any Joe Schmo car. They wouldn't pick a Ferrari. Ferrari's not selling you a car. They're selling you, it's really marketing. But check out these numbers here. This is what I can't believe. Like, they sell you the best car. That's what Ferrari does. They sell you the best car. But check out their margins, way higher than Tesla. 52% gross margins and 23% net margins. This is insane, their net margins, and they're making good net income. I'm just going to assume on average, they're going to make 500 million of after-tax net income a quarter from now on. They made 500 million this quarter. Let me share with you how much the dividend cost. Actually, they pay their dividend only once a year, so they're actually doing a bunch of share buybacks. They didn't do any share buybacks this quarter, which was smart of them because the stock just fell. I feel like after this, they'll do some more, but they're actually a very shareholder-friendly company, buying back a few percent of the stock every year, but they also have a yearly dividend. They don't pay you quarterly, they pay you once a year, and in the most recent year, let's see, on April 23rd, it was $3.39. April 23rd, 2025. April 23rd, 2024 was $2.50. So look at how they raise it every year. $1.48, $1.98, $2.59, $3.39. So this $3.39 is a 0.9% dividend yield. They'll slowly raise that as well. So anyway, Ferrari's a cool one. It used to break this up actually. Like if we go to their revenue, let me just click on some random day. Yeah, look at this. So cars and spare parts are most of their revenue. Then they have their sponsorship commercial revenue, which is pretty cool. And also the engine revenue. Anyway, Ferrari's a cool stock. I decided to buy them for the dividend, the share buybacks. They spent 500 million 2 quarters ago. And here's how you can tell that the share buybacks actually are working. If you go to the net income is up by 12.8. But the net income per share is up by over 14% because the share part of the ratio went down. Remember, the EPS growth rate and the net income growth rate should always be the exact same. The only reason it would be different is either if they issued shares or bought back shares. And in this case, the EPS grew faster than the net income because they bought back well over 1% of the company. And again, it would be more than that, but they didn't buy back any shares last quarter, which is, I'm glad they didn't do that because now they're able to buy back their shares much cheaper. And they have so much, dude, here's what's crazy about Ferrari. They made 500 million in net income this quarter. Let me see what their total long-term debt is. Their total long-term debt, they just paid off some, but it's 2.13 billion. I mean, they're in such a financially stable position. Let me see how much cash they have. Cash on hand, $1.8 billion of cash after paying off all that debt. Like, that's great news. So anyway, Ferrari's in my now never sell portfolio. I decided to trust them more than DocuSign because DocuSign, I feel like, was losing its moat. OpenAI created DocuGPT, Adobe. I feel like a DocuSign will hopefully still do good though, but right after the stock fell, actually super quick little tangent here. This is what upset me. Right after the stock fell, this is the exact day OpenAI created DocuGPT. The stock fell right here to $70. The CEO, CFO, and COO all sold millions of shares. I kid you not, after the dip, not before the dip, but after the stock fell 12%. That's such a bad look. Like, I don't know why management would do that. So I decided to sell out of DocuSign. I only had 10 shares. And I also sold all my shares for long-term capital gains, which means all of the gains were completely tax-free because I held it for over a year and it was taxed at long-term capital gains. And for me, long-term capital gains are taxed at 0% since I make under $48,000 a year. Same with all my dividend income in here. If I get a qualified dividend, it's completely tax-free for me, even in my taxable account, because it's a qualified dividend, taxed at long-term capital gains, and long-term capital gains is 0% tax for me. Okay, again, none of this is financial advice, but how do I know I just paid my taxes? So anyway, here's Murphy USA. This is an oil and gas company with just super impressive numbers. Now, if we go to any oil and gas stock right now, you go to Chevron, you go to Exxon, Their revenue looks the exact same. Actually, Chevron and Exxon, both of their revenues are down 10% year over year, but their revenue is only down 8%. But notice this, they have so much pricing power. This is what's insane. Here's the gross margins. Their gross margins grew, their gross margin grew 10%. Their net margin grew 10%. But look at this right here. Revenue fell 8.1, but net income was it was up by 0.5. That's insane. So that's good news. We can go to the free cash flow as well, but they are exposed to the price of oil. But look what they do with their net income. This is the best part. So they made 145 mil in net income a quarter, or if you know, they made 145 mil this quarter of net income. Check out how much the dividend cost. The dividend only cost 9.8 million a quarter. Like they literally compare for the entire year of dividends in half a month. Like that's insane. And also look at this right here. Since they have so much leftover money, since the share buybacks, or since the dividend costs so little, they're doing a bunch of share buybacks. They literally spent $213 million just this quarter. They're spending easily over $100 million on share buybacks a quarter. That's why their stock does so much better than an average, oil and gas stock, because of their capital allocation. They don't suffocate themselves with a high dividend yield. And I'm not saying Chevron and Exxon do that, but if Chevron and Exxon kept their payout ratio to like a 20-25%, imagine all the share buybacks they could do, which would lead the stock price to go up, or do synergistic M&A. Another thing this company said was 15% of all the money they make, how they want to return money to the shareholder, 15% of it, they want to do it through M&A, synergistic M&A. Check this out. The PE is a 15. They trade at 15 times net income. The industry average is a 20. Again, remember going back to their share buybacks. Since 2019, Q4 2019, they have bought back 36% of all the shares and have literally, they're like 10x the dividend or 5x the dividend. It went from 25 cents, then it went to $1, and now it's $1.80. Like an 8x, yeah. That's insane. So anyway, MUSA is now an oil and gas stock that I really like. So those were the two stocks I decided to pick up in my buy and never sell portfolio. Let me know what you're watching. Also, another stock that next time I get paid, which is next week, I'm going to be buying another share of McDonald's. I'm so bullish on the McDonald's extra value meals. I hear people saying that they're going to McDonald's for the first time in 10 years because the new Monopoly stuff is back in McDonald's. So I will be buying more of this one. Again, another company that's recession proof, recession resilient, because even in a recession, or historically in a recession, McDonald's shares or McDonald's sales go up. Even in a recession, since they own 80% of the stores, they're still collecting that rent every single month from all their tenants, and also their royalty streams, because McDonald's doesn't hold the bag. They don't own the actual stores. That's the low margin business. McDonald's just collects the rent and the royalties. If you go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty. So that's why they have 30% net margins. So it's unseen for a restaurant because they're not a restaurant. So that's why I think McDonald's is taking market share. They're so smart with they like a year ago or less did the Minecraft meal, which was really successful. Now they're doing the Monopoly stuff. So the extra value meals, they have a $5 breakfast meal, $5 meal deal, $8 Big Mac meal. So now I'm ranting, but anyway, that was the video. Hope you guys have a great rest of your day. Again, make sure you hit the like button, and if you leave a comment, I'll make sure to reply to all the comments, and I'll see you guys in the next one, and see you later.